Very much for joining in and taking us through all of those strategies and queries. Well, we have one stock on our radar which has actually come out with a very good set of numbers. NII up 69% for PNB Housing this time, and profit growth of over 50-odd%. And in fact, there's a gross NPA improvement as a percentage to loans, 0.34% versus 0.43%. Well, in fact, we do have the company's management. We have with us Mr. Sanjay Gupta, the MD of the company, to discuss exactly this quarter's numbers. Mr. Gupta, thank you very much for joining in. First, on your assets under management growth, it was strong this quarter at around 47% on a year-on-year basis. What led to it, and what is your view on it going forward as well?
Well, it was an overall growth of a portfolio mix. So whether it was housing, whether it was LAP, whether it was LRD, whether it was CPL, whether it was CF for residential units, everything grew in a very, very balanced fashion. And I'm happy to report that the portfolio mix remains almost same as what it was on 31st March 2017. So, growth all over, and not in particular product or segment.
Okay. Obviously, Mr. Gupta, the big question now is, can PSU banks give competition to the likes of PNB Housing after the government announced that big capital infusion yesterday?
Banks have always been there, and we have learned to live along with the banks. And to put the statistics right, 60% of the portfolio does belong to the banks, and about 40% to the housing finance companies. It's a matured, crowded, commoditized market, and everybody has a competitive edge. When we speak about PNB Housing, it is our delivery model, it is our high customer service standards, our turnaround times, our ability to underwrite self-employed segment. These are some of the USPs that we have brought to the sector, and we are sure that we will continue to reap the benefits.
What is the loan mix in terms of loans against property now, and of course pure housing loans?
Well, housing loans are at about 59%, pure vanilla individual housing loans, and LAP is about 16% of the portfolio.
Net interest margins are at strong levels, 3.15. Could you talk to us, what visibility do you have as far as margins go?
Yeah, primarily a person like me looks at spread rather than a NIM, because NIM is an outcome of your net own funds and spread. So I'm very confident to maintain our spreads at about 210 to 225, and our NIMs at about 315 to 330.
Okay. Mr. Gupta, any stress or any signs of stress seen in the LAP or the loans against property book that you just spoke about?
See, what happens in LAP, that it's an unregulated product. It's actually a loan against property. So different, I would say, players have got different nuances, product constructs, and their credit policy or underwriting policy. So it all depends from lenders to lenders what they are doing in this LAP product segment. So it will be very, very individual to each lender, and not it would be wrong to sort of paint the industry with the same paintbrush. So it will have contrasts between lenders when it comes to LAP.
Okay, fair enough, Mr. Gupta. We're going to let you go on that note. Thanks very much for joining in and talking to us, but it is earnings